Good morning. There's Savvy Trader. Live. And we're going to refresh. Monetization on. Save. There we go. We're going to turn on our Do Not Disturb. And we're going to go over to there. I still don't understand. Let's see, live. 12:07. There we go. I like this little banner down below. To me, I think that was a big improvement. Okay, let's see. Let's see, pre-market, looks like a lot of the stuff's up. Anything major? Palantir's up 1.98%. That is because Kathy Woods bought a bunch of stock last night. In fact, let's see. ARKK. Let's see if put on Broadcom. I don't see. Let's see, PLTR. Oh. Morning, Sean. Still early, waiting for everybody to join in. The bots have not shown up, unless Sean's a bot. Morning, John. I really don't see anything why Palantir would be up 1%. I mean, it was down 6% yesterday. That might be the reason. But it's a fairly big bounce back. Listen, this is a $20 stock. No matter when you get in, whether it's at $17.49, $17.42, at $17.14, at $15. Good, Sean. It doesn't matter. Palantir's a $20 stock. And you can trade it around $20 if you'd like, because that's a nice what? Let's see. From here, if we get back up to 20, 17% move. I would love a 17% move. We're going to move the stroke line down. We're going to move the font size down, because that font size is just a little too large, and we're going to move it to the end. We like it at the end. Okay. You know what? The font size needs to go down as well. Move that down. Yeah. You can see it enough. Let's just remove all annotations. But that's the only one that seems to be moving significantly. Everything up. Simon Property Group down 1.5%. And that is because we just passed the dividend X date. And they pay about 1.5%. Yeah, I think it's 5. Almost 6% dividend. So that's not shocking. Here, this is what I'll take it out of, we'll put it into full screen here. This is what I wrote. Is in the daily stock pick core portfolio in 1031. I said it's a solid stock and told you earnings were solid, and with a 5.75% dividend, you'd be fine buying here. Just over 1 month later, you're up 24%, 3 days away from hitting the ex-dividend date. So if you just sell it today, I mean, you're up. You're up, what? 25%, 24%? Larry. God. I need to start listening to myself. I used to own this one. I haven't traded this one in a while. SMCI, you don't have confirmation. Just simple as that. You don't have confirmation. It got you out with a, 19% gain here? You don't have confirmation, but I do think it's coming back up to fill this gap. So that gap up here at 350, I think you're going to fill it. Right now, you seem to have double topped at about, looks like 300. It can't get over that 300 and hold it. So, I should be doing this on the damn podcast. Yeah, we'll do SMCI. We will do, let's see, I've got chips are fighting with each other. Palantir. I've got and let's see, core portfolio stuff. Tesla up 1%. I mean, Tesla, that's too choppy of a chart for me to trade into. But you have filled that gap, like I said. This gap fill right here. You started to fill it, you filled it. I think it's $250 stock. It's trading at 241. I think you're clearly bouncing off that 200-day, but your 50 days moving up. If you get that golden cross, look out 300. Uber touched 60 yesterday. Uber. It got to $59.99. $59.98 yesterday. Didn't fill my order. Yeah, John. Airlines. I mean, have you seen JetBlue this morning? JetBlue. What? JetBlue. JBLU. Ah, come on. Quit auto-correcting on me. Up 8%. This is the Spirit Airline stuff. Yeah, strong booking holdings. Hey, if you want to trade airlines and you don't want to choose an airline, Jets. I mean, Jets is the ETF. And look at that. I mean, what? Since the end of October, 23%. I mean, picking a place in this market that hasn't traded well over the last month. Now, my algorithm, this is the crazy part. In Jets, look right down here in the middle of the screen. I don't know if I can zoom in like that. That's the performance chart for the algorithm. I think it's going to show it zoomed in. The performance chart, the first number you see, 49% on Jets, that's what my algorithm makes you. If you just bought and held here 24.3 months ago, you've lost 16.1%. So 27 position. You win 41% of the time. You lose 59% of the time. Your average win is 8.39%. So it's a solid, this is a solid earner. I'm going to get rid of that content. But yeah, airlines have gone crazy. Banks have gone crazy as well. If you look at XLF. XLF alone, you talk about Jets. XLF is up 11%. You're seeing the button hook right now. Here, this is how you can use TrendSpider. Just go to the sectors. Go to the sector list. Here you have communications. Button hooked, got you out. Here you have consumer staples. Hasn't performed as well as everything else. Here you have XLE. Look at XLE. XLE during a bull market has just fallen off a cliff. And if we look at a weekly on XLE, you can see it's just kind of in the trading range. It's not crazy. XLF on the short term, we just went over that one. XLV, which is the healthcare, that one just trading above the 200-day. Industrials has soared through the 200-day, really taken off. XLB, which is the material sector. This is Cleveland Cliffs. Real estate has just come back on a run. That's a solid gain. And if you... if you don't want to look at TrendSpider on that one, just go over to market data, and this is free. You can go to Seeking Alpha, use the link on my link tree, but even if you just want to sign up for it and you don't want to pay for it, this is free. I believe this is free. I hope it's free. I don't know. I'm pretty sure it's free. But this is the U.S. equity sector, and look at those. These are the spider sectors, and you can look at them. Look at the day range, and then you can look at the 52-week range over there. It's a solid morning, Eric. Scott, I just had my instant coffee. I'm a decaf drinker, and I'm not a coffee drinker per se, but I like coffee in the morning. In fact, I got to get my water. Hold on. Because coffee dehydrates you. But I just had my coffee. I had coffee with some Greek yogurt, non-fat Greek yogurt, and blueberries. That was my breakfast. But yeah, this if you guys want to know, this page for me. Look, you go over here and look at the 52-week range of the indices. Look at them. I mean, micro cap and small cap and mid cap. And then you've got the NASDAQ at all-time highs. You got Dow Jones at all-time 52-week highs. And then the S&P 500. So, in fact, the Dow is higher than the S&P 500 in the 52-week range. But these sectors are interesting because you can look energy. It's kind of on the bottom half. You got real estate. This was way down here before. Well, now it's kind of in the middle range. You got utilities making their way back up. If we go back to TrendSpider, and this is why I tell you, I think Seeking Alpha and TrendSpider are the perfect pair. And for under $500 for the year, you can create your own system to start looking at stocks and trading like this stuff. I just yelled at someone this morning. We were talking about the safari up here at Great Adventure in New Jersey, and she was like, "Oh, I didn't know there was a safari." And I'm like, "Yeah, it's also a publicly traded company." She's like, "I'm going to buy it." I said, "No, do not listen to a douche on the internet. It's a bad company." Theme parks in general, you talk to Disney, it's just a hard business. But it's a great, if you guys want to know how to look at things, look at Google. Look at Google. I mean, Google, they come out. I need to redo that. Hold on. Google came out with Gemini AI. Okay. Let's see. We're going to go over to Seeking Alpha because I've got to get the article on Gemini. There we go. Yeah, this is the article that I want to bring up so you can read it. Gemini is amazing. If you haven't seen, just go on YouTube. They released a bunch of YouTube videos. I saw one where the dude was drawing a duck, and Gemini identified it as a duck before he even finished it. Then they're playing the marble game underneath 3 cups, and Gemini can identify where the damn ball is. Even with sleight of hand, can identify where the ball is. So. Just buy Google. Just buy Google. I probably should include this article. Yeah, I probably should include this one as well. We're going to include that. It's so good, we'll include 2 articles. Gemini is really, really that good. Let's see. Diamond considered for Treasury head in second Trump administration. He's doing that to try and garner Wall Street votes. Oh, did we have? Yeah, I guess we did have jobless claims climb up. It's Thursday. Thursday, so the weekly. But if I didn't say good morning, Eric. Okay, we're gonna look at that. And then I've been using test. I mean, XLY. You know, here. This is what we'll do. I know XLY. Let's see. Okay. Morning, Zephin. Morning, Chris. It's early morning, Zephin. Hold on one second. I hit the mute button. You know, I do have to admit, living with old people, man, I just took my headphones off. And all I hear is like 9 different Amazon devices with reminders about taking pills. Yeah, he's a big supporter of Nikki. Here's, hold on. Okay, come on. My dog had to come in. Here's what I know about Wall Street and what they're doing. They don't want Trump. There's a lot of people up down there that don't want Trump. It might be like 30. It might be the national poll. 30% want Trump. 70% don't. It might be split that way. But what they really want, they don't want Biden either. So what they want is to insert a moderate kind of person, and she's getting a lot of support. My only problem with Nikki Haley is she will bash Trump, but she won't come out against him. So, I mean, you know, Chris Christie had it right last night. You know, his behavior continues because the majority of the Republican Party just won't say it's unacceptable what he's doing. And, you know, he said he wants to be a dictator for a day. So, okay. Let's see. Wow. That just came out, and all of a sudden it's up at the top trending. Likely delayed. Yeah. Did I put this article in? I think. No, I did not. I'm going to put this article in as well. I had a social request for AMD. Okay. And I got a social request for PHG Target SCHD or Intel. Let me see. Can you guys see if I go to Spotify? And let's see if I go to my show, which is right there, and I go to this episode. Show more. Can I see the... I guess I can't see the social portion. I guess I can't see it. But I don't know if I can see it on the app. Let me see. I'm trying to see if you guys can see the social portion of what people ask about. And I don't know if you can. I know I oh, there it is. Q&A. There we go. Okay. Yeah. Okay. I don't think you can communicate with me on Apple. You have to be listening on. Yeah. Noah asked about PHG, Target, SEHD, or Intel. I'll probably cherry pick. I probably will just cherry pick. Travis, good morning. I hope you're listening live, but it says you commented on the video, not live commented, I guess. I don't exactly know what that is, but I'll look at that. Yeah, I guess you can't interact there. Let me see what this takes you to. Savvy Trader. Portfolios. I should log out. Let me see if I log out. Sign out. And then let's see what happens when I click over there. Okay, so you can see both portfolios. Oh, that's what it is. Okay, my trading portfolio over here is $25 a month. Ignore it. I mean, if you're in there and you're following it, great. But you can't switch back and forth anymore. That's what they did. Let me see. It doesn't see. Yeah, it does tell me that. Okay. So you can still subscribe to the core portfolio for free. It's just the trading portfolio is $25 a month. And full disclosure, I had nothing to do with that. I wanted to keep both free, but, and I don't blame them. I'm still a supporter of Savvy Trader. I think their platform is fantastic. The data that they provide is unbelievable. You can discover new portfolios and follow new portfolios. I think they are fantastic. These guys, I mean, Wolf's growth portfolio has 1K. Yeah. Unlock this portfolio. Yeah, $25 a month. They're making a good amount of money. I mean, you know, Shay's growth portfolio is great. He charges $25 a month. I think they just said, hey, to follow for unlimited, it's $25 a month. So you do pay annually. So $25 a month comes at a price, but I'll just bring that up. I don't think anybody subscribed to me, but Stock Market Nerd's portfolio is $25 a month if you want to follow him now, but he did not opt in. So, okay, let's do some scans. Market scanner. We have to scan some stuff now. Uber. Did Uber really cross up again? It's going for another run. Uber's going for another run. Wow. Square. I mean, just look at that one. It's got confirmation. It's going for this gap up here to 72. Actually, I wish I would have invested in Square rather than PayPal. Lithium Americas. LICY. Yeah, Scott, I will tell you, Shea, in my opinion, is probably worth it if you're trading. What I would do, Scott, for you is follow Shea on Twitter and follow him on Savvy Trader. I think there's some benefit there to get his Savvy Trader. If you want to follow him immediately, I think there's, but if you wanted to save money, I think you could probably just follow him on Twitter and see what he does the next day. But he's a solid growth trader. I mean, he really, really is. And what I like about him is it's not just, hey, here's I'm buying this. It's a complete reason why he's buying it. And it's a fundamental reason. And he doesn't use charts. I haven't seen him use charts a lot. But I know he does. I mean, every good trader does. So let's see, sectors. Not owned. BYDDF. This is the BYD company that is competing. I don't think I'm going to bring that one up. No, let's look at the Dow. Let's look at the NASDAQ. And let's look at the S&P. Southern Company. Okay. Let's see. I've got... I do have to... Let me pull this up. And I'm going to go down here. And we're going to go to this. And we're going to say... preview. Where's my preview? Oh, come on. There it is. And I'm going to shrink this down a little bit. That's good. Okay. That's good right there. And we're going to go back to strategy tester. Yeah, Rivian, good call, Chris. It's up 4% in pre-market to 19. Yeah, Rivian, that's a good one. Good point. I'll bring that one up. I don't have as close tracking on Rivian because I do think it's a $30 target, but I am not it's you can see 1651 in the algorithm. It had finally got confirmation, so you probably should have bought around 17 or so. You had days to buy it at 17 with confirmation. Never lost it. And it's just continued to go. So that gap up there at 21, this might be a pretty good buy because I do think that gap between 21 and 22 gets filled. Right now it's trading at $19, so it's up 5%. The next big resistance, what's nice about this one is look at that 50-day. That 50-day is turning over nice. And you can see that this old resistance turns to new support. This has been the resistance at 17.18, and it turned into not really support, but, you could have traded around it, buy when it got below it and stuff. So I think that's a solid one. Right there, you can see the weekly, the 50-day still moving down. It's kind of hanging on to the 50-day, but you're gaining, you're gaining confirmation. I like that one. I like that one a lot. So, yeah, we'll take a look at that. Qs. I mean, it's just breaking down. That's the problem I have is the Qs, it's up 0.84 in pre-market, but it's just breaking down. Okay, we got some charts, but okay, I'm going to start the podcast now. It's, 9 o'clock? Yeah. Our boy Jim Cramer's about to come on. So, it's early enough for me to start. When I say our boy, for anybody that's new listening, he's not our boy in the sense that we follow him. He's our boy in the sense that we mock him, make fun of him. And you don't pay $600 a year to sign up for his club, which is essentially a texting service. So, let's see. Okay. Okay, I'm going to hit record. Good morning. It's Thursday, December 7th. And yesterday's market, choppy. I mean, we're just getting this chop. Do I know where the market's going? No. Do I see it kind of converging onto and consolidating? Bollinger Bands or cinching up. TrendSpider's guidance says it's going up. I think we're going up for long term. I continue to see this gap here in the Qs down to 378, 376. So I'm just being careful. I'm not buying. I'm not selling. I'm trimming. I'm using this end of the year to actually clean things up. But we'll go over some things that you can do. Some stocks that are trading pretty well. Broadcom earnings are coming out after the bell, so we can talk about that one as well. But let's start off with Thursday. Since it's Thursday, jobless claims, they edge up. And what this means is the unemployment numbers, the people who actually claim unemployment, initial jobless claims edged up 1,000, 220,000. This confirms that the job market is going as expected. And so, we should have some sense of soft landing, some sense of rates probably being reduced. It further showing the weakness in the job market, which should bode well for no further rate hikes. It's kind of the overall market bodes well. I mean, your guess is as good as mine. Inflation is still above the 2% goal, but hey, if somebody tells you, well, we're absolutely going to soar, you don't know that. You don't know that. One thing that I do want to point out to you guys is that, here in my algorithm that's in TrendSpider, and you get it when you sign up for TrendSpider, you start there at 353. This is a nice 9% gain, and you're not out of this one. Yes, it doesn't have confirmation. No, I would not get into the Qs right now. It's just a little too risky on the short term. Long term, absolutely get in. But what I really want to point out is this down here in TrendSpider. This performance chart, when you see it on the screen, it says performance chart 16.1% versus minus 3% for the asset performance. And you look over here, date analyzed, 24 months, so 2 years, okay? You had 25 positions. You win 40% of the time. You lose 60% of the time. The average win is 6%. So over 20, this is my 4-hour algorithm that you can see. It basically trades the Qs. It trades anything that has a chart. You can trade Bitcoin. You can do whatever you want. It performs differently depending on the chart. But specifically with the Qs, it gains you 16% versus losing 3% if you bought 2 years ago. Simple as that. Again, if you want TrendSpider, you go over here to my link tree. The link is down below, Linktree, linktr.ee/daily stock pick. You click on this top button here. And we had Black Friday sales. You had the opportunity to get it a little bit lower. I would not wait. It's $429 for the yearly prepay. The fact that we are heading into probably another bull market bodes well. Again, TrendSpider saying, hey, we're going to go up. If we're going to go up, that $429, depending on how much you trade or how much you invest, is absolutely nothing. You'll gain it. The longer you wait for a sale, the more you miss out on the entries and exits. But here in the Qs, you were in at 353. We've gone on this bull run. I'm a little bit concerned about that gap down below. But if you're looking for the long term, there's no better time to buy than right now. So I did want to point out in TrendSpider that one's up there, that we still have sales going on TrendSpider. You can sign up. Just use that link in the link tree. So again, one thing that I want to point out too, if you're trading, this got me yesterday. If you're trading without a strategy, stop. Take a 30-day challenge. You are, December 7th right now? Go till January 7th. Take one qualified trade for the next 30 days. Okay? Quantify. Basically, you say, okay, if the MACD is crossing up, I'm going to buy. When the MACD crosses down, I'm going to sell. Choose your time frame. Is it 5 minutes? Is it 10 minutes? Do it on moving averages. Do whatever you want to do. Do it on fundamentals. Do it on anything that you decide is good enough for you to trade on. Follow your rule by 100%. Journal everything. Journal. Use Savvy Trader. And to talk about Savvy Trader, there is a change. The trading portfolio, if you want to subscribe to it, it's $25 a month. I had nothing to do with this. Savvy Trader has costs to it. So they basically enacted, hey, you can have one free portfolio. And I chose the core portfolio, which is 35 stocks that I think you can invest in and not be worried about. But I'll show you Savvy Trader in a bit. We'll talk about journal trading. Analyze your data. Just look at it. Look back at it. Learn from the mistakes in the execution. Build discipline. Build confidence. Gain experience. Develop your edge. That's the way you do this. And here's Savvy Trader. Savvy Trader is free for you to sign up for. You can do your own journal trading. You can compare yourself. We'll look at the core portfolio, and we can look at the last 1 month, and we can compare it against the Qs. We're not beating the Qs. The daily stock pick core portfolio is up 4%. The NASDAQ is up 4.2%. We are beating SPY. SPY, on the other hand, is up 4.3%. Oh, daily stock pick core portfolio is only up 4.02%. So we're not beating SPY anymore over 1 month. Over 3 months, we are beating SPY. SPY is up 2.41%, and the daily stock pick core portfolio is up 3.2%. So, but I want you to journal your trades, put your portfolio into Savvy Trader, track yourself. If you are not beating the S&P, if you are not beating something else, then put the majority of your money into some type of ETF that is diversified. That's the way you do it. It's simple. It's easy. Just do that. One thing that I want to point out, one of the Savvy Traders that I found was Shea Buller. And he's just a great trader. He listed yesterday. Now that my growth portfolio holdings have reported their earnings, here's the order from most to least impressive for Q3. This is a solid list of growth names. Melly, CELH, DOCN, Snowflake, MongoDB, CrowdStrike, Datadog, Palantir, Net, Tesla, Team, the Trading Desk, Paycom, GLBE, CF. All of these are solid names. So if you're not following Shea on Twitter, you absolutely should. The way you can get this link is to sign up for my newsletter. It's the fourth link right down here, dailystockpick.substack.com. My newsletter is free every day. You get the notes from the podcast. You get all the links. So what you're going to do is you just go over here. And if you want anybody to follow on Instagram, on Twitter, and you scroll down and you see like Brad Gerstner, just click on that link. It will bring you to this tweet and you can simply follow them. Don't ask me who I follow. Don't ask me who I follow on Instagram. You'll see it. If I think it's important, I'm going to link it here. Like these guys, down here, they asked me, Bullish Bites. I like these guys. Follow them on Instagram. You click on that. And if you're on your phone, it's even better. But if you just click on that and then you can follow them. I mean, nice and simple. I put it in a nice, easy fashion for you to do in the newsletter. So make sure you subscribe to the newsletter. Here on the link tree is where you're going to get to it. Another one that I follow is TrendSpider. And you can see here, there's a lot of insider selling at Coinbase. And TrendSpider has all that information. I actually like to go to FinViz to see some of the insider stuff. It's just laid out a little bit better, and I like TrendSpider. TrendSpider has all the information that you need. It has way more information that I use, but specifically FinViz, they lay it out in a good thing. You can see December 4th. I mean, these are $12 million. These are not insignificant amounts. Look at that. Ever since November 22nd, I mean, even back here, you were talking a couple $1,000,000 with directors and stuff. In August, selling at 77. These guys are selling at 103. These guys are selling at 130. This dude just sold at 140. He sold $3 million worth at 140. So there's a lot of insider selling here that's going on Coinbase. Doesn't mean, hey, let's get out. It means, hey, we're at a 52-week high. 147 is the 52-week high. That's your 8.95% down. If we go over here and we look at Coinbase in TrendSpider and we look at my algorithm loses you 53% on this. You lose 53% buying and holding, so it's about the same. We're currently in that run. Like I said, I posted this on the newsletter. The other day, the 4-hour algo has you in and coin with a 93% gain. Ever since then, it's broken down. You've covered the gap back down to about 133. In pre-market, it's trading at 132. Do I think you should get in? I mean, when that Bitcoin ETF comes out, everybody's going to be holding their stuff in Coinbase. So I think that the selling is justified because it's at a 52-week high. I just don't think it's crazy to think, hey, I'm going to pay for it for this one. Palantir. Kathy Woods yesterday, we can look at this link on Twitter. Kathy Woods yesterday bought a shit ton of Palantir. 1.58 million shares. Okay, that's 1.58 million shares. Let's just do that. What's 1.58 million times 17?
It's 26,860,000.
You talk about insider buys, insider sells. That's an insider buy. And Palantir's up 1.63%. Palantir is part of the core portfolio. Here in Savvy Trader, if you want to see my core portfolio, you just click on that and you can see it's part of the, now it was part of the trading portfolio, but remember, I sold at 20. I called this, I said at 20, I want to sell. It was up here. It got to 22 the next day. I sold on this green candle at 20. It got to 22. I lost out on $2 per share. Big deal. I can buy back here at $17.14. It is probably going to cause a MACD in the next couple of days. I think 17 is your support. I think if we go down further, it would cover down to 15. I think you start your position, and I think you start to buy here. I think you start adding to your position if we start going down. But with her buying that much and that quickly, I think that's a big sign that big money is getting into there. XLY, you guys know I buy XLY because if we just look at, before we look at that, let's look at XLY here. Because if we go to holdings, you can see Amazon and Tesla are almost what? That's 40%. Yeah, 40% of the actual ETF is just Amazon and Tesla. But this article that I'm going to put in the newsletter is a solid article with the top 10 best performing consumer discretionary stocks in XLY. And Tesla and Amazon are not in there. It's Carnival, it's Burlington, it's PDD, it's Royal Caribbean, Florin Decker Holdings, Ulta, which I own outright, Williams, Expedia, Dick's, New Oriental Education and Technology. Those are the top ones in this ETF that are, there's a reason I'm in this ETF. It's to own Tesla, it's to own Amazon, but I also get the rest of these. So understand that diversifying yourself through ETFs is probably a good way to get some exposure to different areas that have opportunity to go up. Now, how do I find these discretionaries? You can use on TrendSpider, if you subscribe, I provide you a list of spider sectors, and you can look at the charts on these. And if we look at XLY, you can see it's got a nice upward trend. Am I buying right here? No, I would have bought below the 200-day. XLG, which is just the top 50 stocks in the S&P 500. It's not the total S&P 500. It's the top 50. This has done really, really well for you. Now, over the past 2 years, you can look down at this performance. XLG, you've made 12% over 24 months. If you just bought XLG 24 months ago, you would have lost 0.4%. So the algorithm works on some things, doesn't work on others, but sepacifically in these, you want to get into these when they're down low. So the other place you can look when it's down low is here on Seeking Alpha. What you're going to do is you're going to go to the second link. You get $50 off Seeking Alpha Premium. I believe that this is free, but use that link to get to Seeking Alpha, sign up for an account, and you'll see these ranges right here. You can see the day range, but you also have the 52-week range. So if we look at XLY, which is consumer discretionary, which is right here, 1 month, 6.5%, you can see it's up near its 52-week high. Do you want to buy it? Probably not. You want to wait for it to cool off a little bit. Utilities has just been a beaten down sector. The reason it's beaten down is because bond rates were so high. And if we look at the 10-year, the bond rates have come down. Well, now utilities become a little bit more. I think it was Bill Gross that said, hey, start buying utilities in the beaten down sectors. Well, energy is even more beaten down. But energy is, a good predictor of when we're going into a recession. Right now, it's kind of indicating that we're going into a recession, but it's more about the demand side. Demand from China is down and our supply is up. So we've been pumping it out like nobody's business. But you look over 3 years, you've made 101%. It's the best performing sector over 3 years. So you want to use this information in Seeking Alpha to make your determination. It's a solid way to look at it. A stock in the core portfolio that I posted about, SPG. And I posted, we'll look at this note real quick. I posted this. SPG is in the Daily Stock Pick core portfolio. On 1031, my podcast, I said it's a solid stock. Told you earnings were going to be solid because I knew the consumer was strong. And with a 5.75% dividend, you'd be buying here. Just over 1 month later, you're up 24%, 3 days away from hitting the ex-dividend date. Today is the ex-dividend date. Today, you are down 1.51%, and that's because the dividend was just taken out. Do I expect it to continue to go up? I don't think so. I mean, SPG is one of those where you buy it at 100 and it goes to 120. The PE is 19. The forward PE is 20. Again, the dividend is 5.65. The target price is 130. I wouldn't be buying at 131 or 129. I honestly just wait for it to cool off, but it's a good indication of how you use the core portfolio to find stocks that are beaten down and you can make money on. So that's a great one. SMCI, great opportunity for me right here. I think that this line right here, which is at 300, I was just drawing this on YouTube Live, 300 right here, you can see. You got a nice little pattern where it's just basically getting off of 300. You're at 253 right now, 256. Now, here's what I want to tell you. The algorithm has not gotten you in. That 9-day is still moving down. The 50-day is still moving positive. So I believe that we will have a MACD cross up some point in time. Wait until you have a confirmation. If you want to start adding now, doesn't mean that you won't come down here to 235. Just understand that you can add on the way down, anticipating this up. This is not something. When I talk about SMCI, the PE is 23. The forward PE is 12. They have plenty of cash on hand. There's no problem. The target price is $375. Look at the most recent ones. Initiated buy in October with a $413 price target. You'll see. I'll show you on the chart. There is a gap up to $350. You can see the insiders are selling at, cost at 55. This guy's selling at 267. That was a options exercise. They're selling in the high 260s, high 270s in rather large amounts. That's just because it's up so much. When you look at how much it's up year to date, this is up 208% year to date. Solid run. Still, the fundamentals are there. The forward PE is only 12. As they continue to grow, that PE comes in and the valuation actually becomes cheaper. So that's where I like this one. And I wanted to point that one out. Another one in the core portfolio that we know is Google. And I said, hey, buy Google under 130. Yesterday, it dipped down to 130. Down here, it dipped down to 129, 128. Its low was 129.40, 129.59. Even this day, December 5th in the morning, it was at 129.73. 130 is the price to buy this one at. It's at 136 right now. Is it has it run too much? I don't know. I mean, here's the news. Google Gemini launches represents significant innovation in general AI. This was a huge release from them yesterday. The other article I will include is Google shows off new Gemini AI model, new AI chip, and hypercomputer. They are making strides like no other big name AI one is. Gemini is actually beating ChatGPT. Google has the scale to do this. Now remember, ChatGPT has Microsoft as a partner, but it's just a partner. All of Google has their eyes on AI. The other one that just hasn't come out with AI, but I think it has a solid, fundamental AI kind of built in. Think about this. And I posted this, I believe, on Twitter yesterday. Apple, here in this country, Apple has 60% here in the U.S. 60% of the people in the U.S. that have a smartphone have an Apple phone. That is a device that will run AI, that will, gain search. They could basically crush Google on search if they develop a good AI. Now, the danger in this is we all know Siri is absolutely horrible, but the jump from before to now, like before their most recent iOS 11, I think what it is, it was bad. It was bad, but now it's much better. So you're getting up there. So I do think that you have trading opportunities in these. Now, one that's not in the core portfolio, but I've said about it before, and I believe it was Chris on YouTube that pointed out, Rivian. Rivian's on a run. And if you look at this, Rivian has a 1651 buy right here. And you can see it's put in solid, just consolidation down there at 16. Bollinger Bands are expanding. You're up above the 9-day. I think this is a $30 stock. I think you get to cover this gap maybe on this run. Right now it's trading at 19. It's up 3.54%. That 50-day is moving positive. So I think as we move positive, this one continues to run. The problem that you have with Rivian is the valuation. If we go over here to FinViz, they're not making money. I think the last one that they were losing $30,000 on every truck that they sell. Year to date, it's flat. It's 0.27. So it has not participated in the run of everything this year. They did issue more bond. They did issue more debt. The target price is 26. The most recent initiation today, up to 23. Buy from Stifel. I think it's a $30 stock. I think it runs to that. You can see Barron's buy Rivian stock, not Lucid. AMD takes on NVIDIA, Chewy share slide, Yahoo Finance. You can read all about it, but I do think Rivian has the momentum right now to continue to run. The RSI is at 60, so be careful. It's a little bit overbought. You want to add a little bit at a time. You don't want to go all in on a name like this because you could be down 10% tomorrow. Social requests. Let's see. There was somebody yesterday, Soto, from Spotify. He says, sorry, but why are you selling and not giving a free trial out? If it's good, like you said, should you pay for it right? I mean, I don't understand the whole question, but they say, the only dumb question is the question not answered. Well, the only other dumb question is the question not researched. If you go over here to TrendSpider, this is the stuff that I sell. TrendSpider, you can get a free 7-day trial. There's no problem. It's got a free trial. I believe in it. You're just going to pay more. I mean, if you want the trial, you'll pay $780. If you watch me, you can see the results of I can bring on a number of people who have bought TrendSpider. Everybody loves it that puts in the work on it. It's not a plug and play thing. You have to do the work on it, but has a free 7-day trial. You can get it. Seeking Alpha, free 7-day trial. No problem. Daily Stock Pick newsletter, free 7-day trial. Those are the things that I'm selling. So I don't understand your question, Soto. Maybe if you have another issue, you can bring it up to me. You can email me directly because I can't respond to you on Spotify. But I would be more than happy to respond to you on email or any of the socials if you want. You can go over here to Linktree. But it shows that you're not going to Linktree and looking because there are free 7-day trials on everything. 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 I mean, flat out, just everything. So, kind of want to address that. Mike from Spotify wants me to look at ADI, Analog Devices. I don't know anything about this one, so let's look at ADI. Analog Devices, solid move. From 164 to 180. You're over the 200-day. You got some gaps down here. Their earnings at 201 wasn't great, but they probably provided some decent guidance. You're coming off a little bit here. The algorithm loses you 12% versus buying and holding loses you only 2%. So it's probably a long-term, that's a long-term trend up. Analog Devices, probably a pretty good one. Let's go over here to close that down. We'll close that down. We're going to go to ADI on FinViz. We'll look at this first, and then we'll look at Seeking Alpha. ADI, income $3.31 billion. Their PE is a little bit expensive, 27. Forward PE is a little bit lower at 20, which is good, which means if they continue, 2% dividend. Average target price, 202. You're at 180. The 52-week high is 200, so you're just 9% below that. Year to date, you're up 10%. I mean, this just looks like a solid winner. The most recent analyst said TD Cowen, November 27th, they raised it from 200 to 210, so not a huge raise. Morgan Stanley in November also said, hey, we're going to go to 225. So you can probably assume that 200 to 220 is probably your top. You can see right here about 197. 200 is going to be tough for it to get through. The 52-week high is $200 to $200.10. So they're going to need some type of catalyst to break through that 200. If we go through and look at these sales, November 27th at 183. The EVP sold $3 million worth. So I don't see anybody buying it per se, but I do see some exercise options here that haven't been sold. So maybe people are just exercising their options, but not necessarily selling them. The chair and CEO sold $1 million worth at 182. Seems like that 180 price probably is a pretty good entry point. A pretty good resistance point. You do on the weekly here, you do have a MACD cross up. If we just look at it here and I zoom in a little bit, you have a MACD cross up right there. Your RSI is at 52. If we go over here to Seeking Alpha and we look at ADI. I know this company just from a cursory standpoint. If you look at the 5-year, you're making money on this, so it's not something that looks horrible. The quant has it as a hold. I think it's a little bit expensive, and that would be the valuation and the growth a little bit high on that one. But you can't argue with the fact that it's a good, solid company that's making money. You can see the 52-week range right here is 154 to 200. I think for me, it definitely looks like a stock where your downside is limited and your upside is limited. So from a standpoint of, hey, we're going to trade this one. I don't think that the volatility justifies trading it, but if you're looking to own it, I think it's a solid win. I can't imagine that you would be upset in holding this one. Because again, your downside is limited, but your upside, I just think your upside is probably a little bit stretched. So hopefully that answers your question, Mike. Alexander wants me to look at AMD, and we're going to look at AMD chart. I personally own AMD. I think my average purchase price is around, 80 something. Might be 90 something. Because I have dollar cost averaged into this. I bought at 109, in fact. It's at 117. The algorithm got you out with a nice 20% gain. AMD yesterday, I posted a couple of things yesterday. This particular one, AMD is fighting with NVIDIA. After AMD launches next-gen open-source software, ROC M6, which really delivers for AI developers, it has 8 times the performance compared to AMD's previous generation. NVIDIA puts out a hit piece on Forbes stating that their software is faster. I mean, NVIDIA is just coming after AMD and saying, hey, we're better. There's also a Seeking Alpha article on this one where AMD sinks as it takes wraps off NVIDIA competitor, updates AI forecast. They upped their AI forecast. I mean, AMD is doing very well. They are the second best chip. NVIDIA is the top chip. So you probably just have to make sure that, which one do I really want? If you want to just trade in semis, SOXX is the semiconductor ETF. And you can see here on the algorithm, just got out with a 13% gain there. If you want a levered ETF on that one, SOXL is the long, SOXS is the short. SOXL just got you out with a 43% gain in the algorithm. 43% gain in the algorithm. That is over what? Let's just say. This was a purchase on November 1st, and it got you out with a 43% gain. I mean, you made all the way up to 60% on this one. This is a triple levered ETF. So it's not like it's going to, you're not going to be super, super safe in this one. So understand that. But read those articles. I own NVIDIA and AMD outright. I do not own SOXX. But I think SOXX, if you're not sure which chip maker to actually get, I think that's a solid one to get. Just get SOXX. And if you want, by the way, if you just go to Seeking Alpha, and this is free as well. I think it's free. I don't know if it's actually free. But SOXX, if you go over here and you just look at peers, and it'll pull up PSI, XSD, FTXL. It'll pull up the other semiconductor ETFs, and you can take a look at them. Look at the expense, 0.38. XSD is 0.36. SMH is 0.36. SOXQ is that is 0.19. So, if you're into expense, and you can look at all these. If you look, SMH is the top performer over 1 year. So you can look at those. They'll trade differently. The actual assets under management, AUM, is what you really want to look at. The larger ones typically are what I would invest in when it comes to ETFs. So Noah wants me to look at PHG. What is PHG? Let's look at PHG. This is Conlike Phillips. Let's see if we have a chart. I'll look at the chart. PHG. New York Registry Share. Yeah, it's a foreign company. I mean, I don't particularly enjoy investing in these. This is like BABA. It's just a foreign company that seems to be here. We can look at let's look at the summary in Seeking Alpha. Operates as a healthcare technology company in North America, the Great China, and internationally it operates through diagnosis and treatments. Yeah, it looks like it's a New York holding of the actual company. From a standpoint of Seeking Alpha, they say buy, Wall Street hold. The stock looks like it's at its 52-week range is 23 to 12, and you're trading right now at 1966. I mean, the market cap doesn't look crazy on this one. Like you might have problem. Let's see how many shares. Shares outstanding, 920 million. That's not a lot. That's not a ton. It's got an $18 billion market cap, but they're not making money. So in this market, I'd probably stay out of that one. Target. Target was a podcast favorite. I am still holding Target. I took it out of the core portfolio, but you can see we've gone on a run here. You had the gap on earnings. Looks solid. This might be a turnaround story that you can invest in. The problem is, and I say this on the podcast all the time, good stocks with good profits, with good products, with good management. That last part, good management. They suck. They just suck. They've just shown that they suck. Go into a Target and look at their inventories. It's getting better. But solidly over the past 6 to 12 months, they've just run out of everything. And all you see are people running around. You can never find a cash register into Target. The self-checkout lines are packed. They're just people who are focused on e-commerce. So they're turning things around. It's a 100% a turnaround story. Here's Target. The PE is 16. The forward PE is 14. The average target price is 150. This was a $300 stock, mind you, a $300 stock. And all they did was fall. Year to date is down 10%. The most recent earnings, Telsey Advisory Group outperformed to 160. They upgraded it to. In November, TD Cowen brought it down to 148. In November, Wells Fargo, equal weight, but they didn't put a price target on it. So understand that I think it could be a turnaround story. When you look at this weekly, you can see the 50-day starting to move positive. You're starting to see that turnaround. I've held it this entire time. Up here, this was $270. So I don't have a lot of love for Target, but I do think it could be a turnaround. SCHD is the other one. This is the Schwab Dividend Equity. It is what it is. I mean, you know, if you want to invest in this one, SCHD, I think it's got they've been hurt on this one for the year. Year to date, it's down 4.51. You got a dividend of 3.63. I'm not completely in love with this one. I mean, you know, you can take a look go over to Seeking Alpha, and you can look at the holdings of this one. I'm not 100% in love with it. Verizon, Amgen, Broadcom, Coca-Cola. I mean, these stocks have just been beaten down. So is it coming back? Probably. The 52-week range, you're between 66 and 78, and you're trading at 72. Doesn't excite me. Intel is one that I think this one has run its course as like all the others. You got out with a 19% gain. I would wait for this one to get under 40. I think it'll get under 40. I think it'll come back down here to 35. Do I think it covers this gap at 33? I don't think so. I think you're going to use the 200-day as support. You could even use the 50-day as support at 40. But I do think you come down here to 36, 37. Intel has just had a crazy, crazy run. If we look at a long term of Intel, you can see the 200-day may provide some resistance here, but with it, the 50-day moving positive, I think it will continue. That 200-day absolutely provided resistance. Trading on the upside of the Bollinger Bands, cross up on the MACD, RSI is high at 69. That's why I said stay out of this one at 46 on the weekly. But I think you do have an opportunity when it pulls back. I just think it's a little bit extended. So let's talk about some of the scans. Uber is one that got a scan. This one traded to $59.99 yesterday. I'd like to sell this over 60. Am I buying it here at 60? No. I think you can get this under 60 right here at 59.88. I just think this one pulls back. Look at that RSI. It's continuing to run, even though the stock's going higher. It's an overbought stock. And the RSI and the MACD just crossed up again, but it just seems to be crossing up and crossing down. So 60 is where I'm looking at selling this one. I will buy back. I will take my profits, and I will bag back probably around in the 50s. I have no doubt in my mind I will buy this one back. Square. God, I wish I would have bought this one instead of PayPal. This one has just had a monster run here. 43, and you're at a 50% gain. Yeah, 50% gain right here. Just in 1 month. 50% gain in 1 month. That is a solid gain. This is part crypto. This is part just the company's running better. This is part just everything. I think you get to this gap at 73. I think it's a solid stock. I think this one, if you're in this one, stay in it. If you're not in this one, I think if you want to play it from 68 to 73, I think you've got confirmation. I think you're fine. Lithium Americas. This one, I want to point out this one because it's one of the energy names that's in our energy trading names in TrendSpider, but you don't have confirmation. And I would not get into this one, even though you have this gap up here at 12 to 15. I would probably just stay out of this one. It does come up as a bullish one, so I figured I'd bring it up, but I would stay out of this one. SMDD. This is the ultra pro short of the mid cap. So as the mid caps go down, this goes up. You can see as we've gone up, this one's gone down. I wouldn't buy this one either. You don't have confirmation. That 9 days just starting to turn, not worth the risk. There are a lot of other good stocks like Rivian, like XLY, like some of the other ones. DRV is the bear, 3 times bear On the real estate, I would not get into this one either. You just don't have the confirmation. Yes, it's bullish, but I would not get into that one. Short Dow, SDOW. This is the Ultra Pro 3 times levered Dow short. I would not get into this one. We're in a choppy market. There's no reason to risk your money right now when you're down below that 9-day. Rivian looks solid. I like that one. Google is going to go up. Now, one that I think is an interesting one is Southern Company. This is a utility. We talked about the utilities being beaten down. You can see here, this got you out with a 3% gain. This got you out with a 1% gain. But if you bought here and just held, that's a nice 16% gain over just a couple of months. October was not bad for utilities. The bond rates came down. So utilities, we went over here and we looked at the market data and we looked at XLU. Which is down here, there it is. And the 52-week range, 54 to 73. And right now you're trading at what? Let's see. XLU is trading at 63. So it's trading at 63. And if we go over here to XLU, you'll see we're seeing, and I think I said it earlier, Bill Gross is the one who said, hey, buy utilities. Southern Company's just going with XLU. So if we look at XLU and we look at the holdings, you can see Nextera is 1, Southern Company's number 2. So it's a solid utility company that gets you a dividend, and it's got a decent chart. You know, you just Southern Company, it's just passed above its 200-day. But if we look at a long term, it's got an opportunity to come back. I mean, you can see back here in August 2022, this was a $79 stock. All the while getting a, let's see, SO. I think it's a 3% dividend, 2.79. So solid gain. Okay, there you go. There's the podcast. If you've got any questions on here, I hope that Soto writes to me. I hope you ask where you can get 7-day trials and where I'm not giving free trials. I mean, that yes, I'm selling this stuff, but you get 7-day trials. If you don't like it, you get your money back after 7 days. Seeking Alpha has a 7-day trial. TrendSpider has a 7-day trial. My paid newsletter has a 7-day trial. Webull does not have a 7-day trial. But Webull, I just put money in there. In fact, let's do a check. I think I'm at 3,060 or something. I put $1,000 in there at the beginning of the year, and I am at $3,089, $3,090. So solid gain. But if you want to support the podcast, these are the things. If you made money and I looked at your stock and I saved you money, if I did anything, it's the time of year to give. Cash App, PayPal, Venmo. Just say thank you. $1. If you made money, I don't care if you give me $5, $20, $100. I've gotten tips as high as $1,000. But if you've made money and you're giving $1, if I had $1 for every person that listened to this podcast, I'd be a rich man. I would be a rich man. So show your love. But yeah, I will talk to you guys tomorrow. Have a great day. Okay. I'm going to blow my nose real quick. Okay. I think that was one of my best podcasts, to be honest with you. I thought I brought up. Good morning, Sherry. Think of starting a position in Walmart. Let's look at Walmart for you, Zephan. Zephan is one of the OGs, so it's like Zephan is probably young enough to be my son. Here's what you have to know about Walmart. You're not going to zero. I think they are the best of breed. There are one other stock that I would look at other than Walmart, and it's Costco. The problem that you have with Costco is it's just, I mean, look at this weekly. It's at all-time highs. There's no reason to get into Costco right now. Walmart's a little bit of a different story, but it's got, when you go to the weekly on this one, you can see it's still got some downside. I think that you could go down. Now, the RSI is at 45. This is not to say that I think they're doing anything bad. This is just, for me, if I were trading Zephyr, I would, it depends on if you got out of Target and you're taking a loss on Target, you might have that wash sale. So you have to look at that because you can't buy back in for 30 days. I would probably trade Target over Walmart and Costco with the risk, with a pretty good stop loss on Target. But I just think Walmart and Costco, between those two, are just a little bit stretched, and I think your upside is capped. Whereas your upside on Target, I don't think is capped. So that would be where I would point you if you're looking at Walmart. Did you mention ACLS? No, I did not. What is ACLS? Excellus. No, I know nothing about this company, but boy, it looks horrible. Boy, that looks bad. That's just since August. No. Income 232 million, PE 1714. Year to date is up 53. Even though it's up, God, even though it's taking that slide, it's still up 53%. Target price 180. Initiated coverage, buy at 225, and you're trading at 120. I mean, that was just September. That's an interesting one. Morning, Sherry. SOXS looks good. I mean, if you want to trade SOXS, I mean, it's ripe. At $8.30, you're trading $8.74 right now. It doesn't quite have huge confirmation, but I agree with you. That gap up there to 971. I mean, again, chips, I think, have run. You got this death cross right here to worry about. But, I mean, you're in no man's land. And here's what I would tell you, Zephyr. You're in December. You got to take stock of the new year. There's no reason to force things right now. So I'd be careful about what you get into and get out of. ACLS Ice Bucket Challenge. That's kind of what I was thinking. Yeah, Roblox. She loves Roblox. I know she loves Roblox. I know she does. Oh, the one she really bought yesterday was Palantir. She bought a ton of Palantir. And Palantir is up 0.41%. I think Palantir, if you you're out of Palantir on the algorithm, but look, the RSI is at 30. I mean, this is just an oversold stock at $17. This was up a lot, I think, earlier. Let me look at the extended hours. Might go to a 5-minute chart with extended hours. I think this has come down. Yeah, look at that. I mean, that was trading at 1745, and you're at 1720. No reason to get into this now. I mean, you want to buy on strength. You don't want to buy on weakness. But yeah. I think you're coming down here to this. You might use the 200-day at 1685 as support. But if you're coming down, you're going to come down and probably cover some of this gap. So it makes sense. Morning, Sherry. Yeah, I think that was one of my better ones. Ice Bucket Challenge. Yeah, I think I did a good one today. Okay. It's 9:47. I've got to get out of here because I've got to do some stuff. I've got a dog who's currently... I wish I could show you she's got her little head. My Penny. Penny is the copper dog. She's a little Chihuahua, Dachshund, Pug kind of mix. She was in a hoarder's house with like 47 other dogs. And her head is literally like the size of a baseball. It's so tiny. And I'm just amazed. And she looks so peaceful, sleeping right now, but she would kill anybody that came into this room right now. Okay. I am going to talk to you guys tomorrow. Thanks, you guys, for joining. Anybody that needs me, you guys know where to reach me. But I think it was a good one today. And Sherry, I'm glad you're joining us again. SMCI up 1.4%. I mean, just, God, this one's juicy. I'm going to buy more of this. Roblox is under 40. God, you've got Apple up 1% again. I mean, I want to trim some Apple before the end of the year. I think I'm going to trim some Amazon, but both of them have confirmation. Remove all annotations. Both of them. Oh, come on. Oh, why can't I bring that down? There we go. I mean, look at you. You're kind of just capitulating here. I mean, the Bollinger Bands are cinching up. And in this market, when Bollinger Bands sync up, I'm kind of tempted that this one's going higher. I mean, here, indices check. Let's see. Let's look at this one. Bum, bum, bum. Got to unlock it. Log in. This is my Fidelity app. I'm going to make some really good money today, by the way. Yep. I am up 1.2%. The indices are up 0.6, 0.4, and flat on the Dow. I'm doing really well. It's the great, probably the grade 8. It just looks. So, Zephan, it's kind of like following a douche on the internet. You do want to listen to the market, because those people that know the market and know these companies, they will always, the people with bigger money will always know more things than you. And the reason I say know more things than you, Kathy Woods has a staff of about 30 analysts that do nothing other than dig into social media, dig into reports. You don't have the time to do what their analysts do. Warren Buffett has about 300. I mean, let's see if they list BRKB, the employees. Yeah. 383,000 employees. I mean, they obviously don't work for, they're in different companies that Berkshire owns. But I guarantee you, he's got, probably 1,000 analysts that work for Berkshire that just look at companies. So you don't want to follow a douche, like for instance here, and I'll put this kindly. If we look at ARKK and we go over here and we look at charting, and then we're going to we'll select performance total return. And we'll chart against, we're going to get rid of the S&P 500, but we're going to chart against BRKB. Okay. And we're going to go long term. I think she's been around for at least 5 years. So she's made 18%. Buffett's made 71%. Over 10 years, she just started her fund way back here in 2014. But over 10 years, she's made 165. He's made 208. Over a year to date, she's up 59%. He's up 13%. 1 year, she's doubling him. 3 years, she's actually losing 58%. He's making 53%. So that's just to point to you, hey, Palantir versus Oxy. They are 100% two different investors in two different industries. Kathy Woods would never buy Oxy Warren Buffett buys Oxy for a simple reason. And I think he's looking to actually buy that company so that he can provide oil and gas to his railroads. And I think he's going to take it private at some point. I think that's probably but Munger died. And Charlie and Warren were the kind of thing. So you got to worry about that. If Warren dies, they could be selling a ton of Oxy. We can take a look. Let's see if there's any insiders since their buys. Here's the buys. Last one's October, 62, 63. But remember, Warren holds stuff for 10 years. I mean, he doesn't, buy and sell typically. I think he bought the airlines and then sold the airlines quickly. But their average target price is 71. So, but you look at that. Oil has just been a crazy bad year for oil. Yeah, Zephyr. I mean, here's the thing, and you want to do that with those great eights is when you, and specifically I say this here. We'll look at ARKK against select symbols, XLG. Just looking at the XLG. XLG is up 33% in 1 year to date. I mean, it's beating Buffett. You look at 1 year, XLG up 28%. You look at the 3 year, and it's not beating Buffett, but is blowing away Kathy. So, look at the 5 year. 5 year, it's blowing away both of them. Look at the 10 year. XLG is up 245%. That's the top 50 names. So, yeah. I mean, energy is one of those things. I think it's a big bet. I think when I go over here to FinViz and I just look at oil, look at the chart. I mean, WTI, you're down where, at the bottom. The strategic oil reserves has to get filled. And that's what I've been hanging my head on and not getting out. They have to get filled. And when they start to get filled, the supply starts to dry up a little bit. And OPEC has been pulling back. OPEC doesn't like what's being done. So here's the crude oil Brent. Here's the RBOB. I mean, you can look at heating oil. It's down. Natural gas has just been a killer. Ethanol. I mean, look at all of these metrics. It's all down. And then you go over here and you go to market data and you look at the XLE, which is energy right down here. Look at the 52-week range. I want to click on XLE. It's just, it's been horrible. But it's up so much. That's what you have to understand is XLE was up so much that when you go to a long term, doesn't mean you still don't have downside. I mean, look, it's not performing horribly. So, in the long run, when the world shut down, XLE, you could get it for $23. And then we had that golden cross. And the 50 days just starting to move a little bit negative. So I don't think that you don't have more downside, but it would be nice if we had upside on that one. Eli Lilly, I think this one, we're just capitulating. I mean, look at how tight that Bollinger Band is. And you've got to go somewhere. And the question is, are you going to go lower? Are you going to go higher? Unfortunately, right now, I think it's going lower and may cover this gap down in the 560s. But you want to add to your position, remember, your winners, you want to add to your position. Your losers, you want to cut those. So you've got to be kind of disciplined in identifying where your trade is. Is it a long term? Is it a short term? Is it a medium term? You got to identify your upside, meaning that, I said, hey, Uber, my upside is $60 and Uber's at $59.73. I'm going to sell it at $60. It didn't hit yesterday. Going to put it back in today. I think 60 is the top. So, Palantir, it went to 22, but I sold it 20. I didn't sell it on the way down. I sold it at 20 on the way up. So you want to identify those kind of opportunities to try and make sure that you're not sitting in stocks for too long. Oxy, Devon, I've identified those as long-term. So is that Nokia, NOK? Yeah. God, man, I think Nokia, from what I know, back here, the flip phone was coming back. And these guys had some type of thing with flip phones. And they just haven't. I mean, the flip phones for Galaxy and stuff like that's the big thing is people are saying that flip phones are coming back and these guys are the kings of flip phones. I just don't see it. I mean, I don't see them taking over from Apple or Android. I think they do still run Android on some of their flip phones. Let's look at Seeking Alpha. Oh, come on, symbols. I mean, the valuation A+, growth C+, momentum D, revisions F. Even the volatility doesn't get me excited. So I don't think I'd look at that one seriously, but I like Fubo more than I like Nokia. Fubo's been solid since 242. You had this pullback. I mean, listen, that was 11% here. You had this one go all the way up to a 32% gain, and then you lost confirmation, so you absolutely should have sold it and bought back in once you had confirmation, and you're looking at another 43%. Yeah. I mean, nobody knows that, you're going to have this kind of craziness. But I would not be in. If I bought Fubo down here at 247, I probably would not still be in at 319. You can see the RSI is kind of in no man's land right now, but the MACD just crossed down. You've lost your confirmation on the 9-day. I'd probably be taking my profits on this one, just scared that this gap at 260 to 267 comes back. Yeah, Sherry, you're a good trader. You know your stuff. I would just be a little bit concerned. But Nokia, I don't think that there's anything there. I mean, again, if you want to know the most active stocks, I like this pre-market movers on investing.com. Here, I'll send you this link. You should bookmark this link. This is a great one to look at pre-market. Bookmark this one. Bit Brother, I mean, you can look at the changes. Pre-market top gainers. Syngin. This one, I think, is this the one that's being bought by AMZN? Let's look at AMZN. Where's the stock that's being bought by? Rose Ventures into weight loss drug market with 2.7 buy up Carmot. God, what's... So it's not even a public company. Yeah, I thought AMZN... Maybe this... Where's that pre-market movers list? CYN. Let's look at CYN. I know I saw this one, news of this one. It's up 83%. I mean, the last analyst, March 6, 2022. Let's look at FinViz. They obviously had some type of filing. Oh, AI-powered autonomous vehicle technologies. But, you know, here's the thing. How are you finding this? I mean, how are you making, 80% in a day if you don't work for this company? No, stop. Remove all annotations. You're just not going to be able to make that 115% unless you work for this company. I mean, again, you're in at 19 on the algorithm here, but it's a company that's just losing money. So, look at that. It was a SPAC. Well, I don't know if it was a SPAC or not, but it just gapped down here after trading in the 80s. Gapped down, and now it's worth nothing. Yeah, Zephin, take $10. I mean, honestly, just take $10. Have $80 and just buy it and continue to add to it. I can tell you my initial buy into Apple, it was a very large position for me at the time, but today would be considered a super small position. But that initial buy into Apple, I think it was about $5,000, was a very large position in my portfolio. Huge. And I've done large ones like that. But over the years, I've just added, $20, $10. I reinvest the dividends, which is about $2,000-$3,000 every time they pay a dividend. So it continues to grow. And I'll tell you, the best way to do that is just those companies that you believe in. And the grade A, in my mind, are companies that you should believe in. Just throw $10 into them. And trade around the rest of the stuff. But you want to just continue to add to that stuff. And you're young enough so that if you add $10 and just continue to dollar cost your average way in, and you've seen it with Google when it was under 100, Zephin. You've seen it with Amazon when it was under 100. You've seen it with Apple when it was at 120 at the beginning of this year. You've seen it with Meta where it was trading at, way down here at 200, earlier this year. You've seen it with all of these companies, with Netflix, where it was just trading at $300 down here. You've seen it with all of them. And even NVIDIA. Buy it when it's, just dollar cost your average way in, and you start to gain. PanW is a great example. I mean, shit, I should have sold PanW when it was at 300 here. But it's a solid name. Palantir's back up at 1740. It went down to 1720. Let's look at we're going to look at a 5-minute on Palantir. Because has it gained? We're just going to pull this back. Yeah, it hasn't gained. I mean, these are fairly big 5-minute candles, but 1%. Yeah. Exactly, Joe. And that's it goes back to kind of Zephin. Read the newsletter, and the top of the newsletter is going to have those rules, those 7 rules that I have. Trade one quantified trading position for 30 days. Understand trading is trading. Follow your rules by 100%. Journal every trade. You can use Savvy Trader. They're only charging you for following people. They're not charging you for having your own portfolio. Analyze the data. That's where you're going to look at it against indices. Learn from the mistakes. Build discipline. Build confidence. Gain experience. Develop your angle, your edge. It's simple. I mean, Trading and investing doesn't need to be complicated. What's complicated are people. I have a friend who was invested in this Fidelity ETF, long-term ETF. It was one of those target date kind of things. And she looked at it and she said, I'm not doing as well as you. And I said, yeah, our risk tolerance are different. You have to understand your risk tolerance. You have to understand how much time you want to put into this. She was basically looking at it once a month. Well, if I had my portfolio and I was looking at this shit once a month, my ass would still be in a 9-to-5 job. My ass looks at this almost on an hourly basis. So I manage things. I'm not always trading every day, but I'm managing things on a daily basis. So hopefully that makes sense. Okay, and it's 10 o'clock. I am out of here. Thanks, you guys, for a great day. I will talk to you tomorrow. See you, bye.